Welcome, everybody, to another exciting episode of On the Couch. If you notice, I had to lean back so I don't scream in the microphone.
You're going to make people jump off their seats, especially in their car.
Yeah.
All of a sudden, we're going to start the podcast, and they're just like...
You guys don't have your
That's why I went, welcome, everybody, to On the Couch, where we dive into financial literacy. We talk about being a mortgage agent, mindset conditioning. There's no fluff, no special juice you need to drink. This is just raw conversation about the industry. Sometimes we have guests. Sometimes we just talk about nothing and just talk about life. Today, we have a very special guest, a very good friend. I am one of your hosts, Johnny Supa. We're here with...
Danny Cardozo.
And who's our guest?
Assad Ali.
Assad. The most relentless BDM I know.
Why, thank you. That's a good thing, right?
It is, yeah. Relentless is a good trait. I say my daughter's the most relentless person I know. I think you come in a close second, definitely.
That's a compliment if I've ever heard one.
Yeah, you are. You're relentless, and that's why we enjoy you as our business development manager for the brand that you represent, which we'll talk about in a second.
Sure, man. It's great being your partner, man. Thank you.
Yeah, thank you. Yeah, you made it. To be honest, I think you were one of the first BDM.
I was just talking to Danny about that.
Yeah. Me and Assad were just
I
talking
was saying
about
I was one of your first AAA lenders.
Yeah.
And, you were getting started out then, and you've grown a lot since, but I think a lot of people have seen you grown and gotten interested in you.
Yeah.
And I'm a jealous BDM, by the way.
Yeah, you are. You're definitely a jealous BDM because you call me like, where are my deals at?
They're only for me.
It's such a tough market because obviously the product that Assad offers is a very niche, not very niche, but it's a lending, right?
Yeah.
And it's very particular. The last couple of years has been very difficult. But I want to go back to the beginning. Like when Assad came to meet us, it was like a ball of energy. It was this guy who's got a wealth of knowledge. Like,
Yes.
I think sometimes I even take advantage of his knowledge and it's like, yo, I got this file. Like, what could I, how do I make this work? And he tells us everything from structuring the file to even how to write your notes.
Yeah.
And that's what Danny and I always say from the beginning. Like, we want to work with partners who want to work with us. And when we need help, are you there to help us? Or are you just going to push us aside? And you can see it. There's BDMs and you call them, it's like, oh, like you get the rolls, the eyes rolled back, where Assad is not like that. Like this guy would drop whatever he's doing. I can hear his kids in the background and he's giving me the advice I need to know. So thank you for that. And welcome to the On the Couch.
Thank you, my brother. What a great introduction, man.
And I want to say congratulations.
Oh, thank
Yes.
you, thank you. Yes, I just had my son actually in November. Just a little bit tired, I got to say. He's getting better. He was born peak daylight savings, so it was like dark 24/7.
Yeah.
He didn't know what day was or night was. He was sleeping at like 3 a.m. at a certain point. It was pretty crazy, man, for a while there.
You got to break those habits and put them into habitual habits, as I call them.
Yes.
Yeah. I am so giving to having my kids sleep in my bed. And my wife is the total opposite. Absolutely not.
You said earlier you're talking about BDMs rolling their eyes, and it just made me think about something. It's like my modus operandi. So I was a broker at one point, right?
I saw
Yeah,
it.
you
So
were,
what's
yeah.
Modus operandi. It's like the way it's in Latin. It's like the way I function, or like
I thought it was a brand.
No, it's like how I go about things, or it's like my way of life, so to speak, right? But when I was a broker, I remember having BDMs come into our office, do these excellent presentations, get you all pumped up, and then I would call them and they wouldn't answer their phone.
That's the worst.
Buddy, we get that all the time. Like,
What
we
was
have
the point of this?
BDMs walk in through this door, literally. They'll sit themselves on the couch. They'll tell us exactly why they're absolutely amazing and why we need to work with them. And then I'm like, okay, you know what? No, I'll send you a deal. We'll start there. We'll see how it goes.
Hey, why don't
They
you send
don't
me a
answer
deal?
the phone.
I'm just kidding.
It's funny because on our wall it says "Send Assad all your deals."
I wrote that on your whiteboard there. It's like,
No, it's on our comment wall. It's on
oh
there.
yeah, with permanent marker. I love that.
You
You should frame that.
that's that same mentality.
It is framed. That's the wall of lines.
Oh, thank you, gents.
So, as a matter of fact, like even when we interview agents and they come into the brokerage and they say the things I want to hear, those are the ones I don't want to hire.
when you get somebody that has a wealth of experience in their field, they come in with habits and they expect to do things a certain way, and they're going to tell you how to do things, right? Whereas I think what you're doing here, where you're growing a team from scratch, you're essentially grooming people to be excellent agents and eliminating bad habits before they even set in, right?
Yeah.
So, no, good point, man.
Yeah, and I like that when like Assad gives advice. He's like, hey, like when we go to lunch, it's like you got to bring a pen and paper because he's like, so
Yeah.
if you put
Take this note down. Take
yeah
that note down.
Text yourself
You
this.
know what's really working with that brokerage? And I was like, sod, but keep throwing them
Send
in
it,
there. Yeah,
yeah.
tell us what's happening with those guys so that we can compete with them and
I
make
gotta
us
start
better
charging
than
you
that.
guys by the hour here. What's going on?
no, but that's what we like. Like we had lunch the other day with a reverse mortgage, a BDM,
Nice.
and it was like, hold on a second, what are you saying? Let me just jot this down, and we did, and we're implementing. And Assad from day one has always said, hey guys, marketing. Like we always talk about marketing.
Digital marketing,
Digital,
yeah.
like, and Assad brings in these great ideas, and it's like, okay, I like that idea, and sometimes it obviously it takes time to implement something and get things going, but
For sure.
man, honestly, man, we appreciate you, and
Thank you, boys.
let's jump into like where you came from,
Yeah,
where you're at, and where do you plan, like where do you want to go?
for sure, man. Yeah. So my career in the mortgage industry started out 15 years ago, back at ING Direct when they were still called that. You guys know
ING
Tangerine?
Direct.
Tangerine,
Yep,
yeah.
Yeah, yeah. I was there for 4 years. I was the number on the back of the debit card, man. I used to get calls. People would be like, I want to transfer money. And my job was to cross sell them things. And being an 18-year-old kid in the bank with something to prove, chip on his shoulder, I was aggressive, man. I'd ask anyone for anything. Like I'd push things on people. And, I got the knowledge from the bank. They gave me excellent training. So within a few months, I ended up in the mortgage department. They're like, buddy, you're killing it here. Come learn mortgages. I started out in mortgage servicing. So I was the guy that you would call to make prepayments, payment changes, penalty calculations. And the really cool thing, I got to give kudos to ING, is that they gave me a very comprehensive training. They took us off the phones, they put us in a classroom for 3 months, and every day we learned the mortgage glossary, A to Z, everything you need to know, right? From there, I moved into retention. That was a cool game that I got into. Acquisition, taking applications for people, kind of what you guys do, right? But over the phone. And then by the time I left, I was a trainer for the new hires. I was the mentor, and I used to train new hires on how to service a mortgage. So I think my solid foundational base of mortgage knowledge really came from there. I then moved to CIBC. I was there for 5 years. I was at First Line Mortgages. I was actually part of a really cool pilot. It was actually, so I don't know if you guys knew this, but back in the day, CIBC used to offer mortgages through brokers, and it was called First Line Mortgages. And so they decided to wind up that business. And what CIBC was contemplating at the time was selling that book of business for a discount. And our pilot was to renew that book of business directly to CIBC. They were considering selling it for 40% of its value, and we ended up like retaining like 80% plus every month. So crushed it there. That was awesome. Really cool experience, right? And it also kind of teaches you some tricks of the trade. Like you guys as brokers, your competition is retention.
Yeah,
That's a big piece of your competition that a lot of people are sleeping on.
yep.
especially right now because the renewal is there, right? So they're not spending the money on to acquire new business. So acquisition is not going to be invested in. It's going to be retention.
Early renewals is something that's slept on, right? So if somebody offers a renewal 120 days in advance, you as a broker can't even compete with that. What I mean by that is if somebody has a mortgage coming up for renewal at 5%, let's say you as a broker can offer 399 today. The bank can offer 409, but they'll do it 120 days before their maturity date. And they'll say, hey, the difference between 409 and 399, right? These extra 120 days that we're going to give you a discount from 5% down to 409 exceeds the savings. Just renew now.
Smart. That's retention 101.
That's retention, man. That's a tricky one too. And how do you compete with that as a broker,
You
right?
don't.
So
You don't, because now they're saving millions on marketing and advertising for acquisition.
Yep.
And all they're doing is it's just strategy on the retention side.
I think it costs 3 times more to acquire a new client than it does to retain one. So yeah. So anyhow, that was that. Then I'll speed this up because 15 years is a long time. I was at PC Financial then, right? I used to do deals there, just like you guys, over the phone though. I did 200 million a year there for 2.5 years. Then I was packaged out when they became Simply Financial. They, obviously downsized a little bit. I was at Chip Reverse Mortgage for a year. I moved over to Canadian Western Bank after that for 2.5 years. I was the underwriting and documentation manager there. And then from there, I shifted over to being a broker. Enjoyed that for a while. And then when my daughter was born, I got the BDM gig, and I've been at Merrick's now for the last 4 years as a BDM.
And with all that experience is why Assad is at the top of my list on phone people to phone call.
Call me.
Yeah, it's like I need an answer and I need it now. And he answers the phone.
You know what, man? It's
Well, I
just,
mean, he used to answer the phone. Now he's more of a callback type of person. But
hey now, hey, if I don't answer, I text. I'm like, hey man, I'm on the other line. I'll call you.
everybody knows Assad now.
Yeah.
Like that's it. Now you can't get a hold of him on the first call. He's got to call you back.
Hey man, you know what? As a BDM, the most valuable thing you have is your time. And eventually your time is occupied, right? So it's like you got to choose who you want to devote your time to. You guys are always going to be part of that list, by the way. But it's a big piece of being a better BDM is creating value, right? So like you were saying earlier, I helped you with marketing. Man, I took it upon myself to do a course in digital marketing, like through a Google certificate or whatever, just so I could create value. Like you don't want to always sit in front of a broker and be like, hey, give me your business, right?
But I think like if I go back to what you were saying earlier, like you talked a lot about being at ING Tangerine and that big corporation, they spend a lot of time in training.
Yeah.
And for you to sit inside a room for 3 months learning the A to Z's of mortgages, like that's a lot of knowledge to have,
For sure.
right? How to handle objections, how to overcome you know, making outbound calls or cold calls, upselling, like all of those trainings are what somebody needs every day in this business.
I gotta say, it's a very competitive landscape right now, right?
Because retention is high.
Retention is high, but what we're seeing with the banks right now in particular is they've always been the go-to for brokers uninsured business. More and more what we're seeing them do is, hey, they're telling brokers, hey, we're making these exceptions on uninsured, we're giving you this rate, we want your insured business too. So they're actually going after the insured business as well. I think the market is volatile. There on a global scale, there's economic uncertainty. The bond yields are very volatile right now, and
Yeah,
that's
they
leading
jump like
Yeah.
so
up and
much.
down.
Like,
They're
there's
fluctuating way too much. I don't think
They're doing
banks can't
jumping
even, they
jacks.
can't even make like they can't even adjust the rates in time while these things are fluctuating. It's crazy.
Yeah,
So
and I
it's
think
like
it's
I think
people
there
are
was a
insured
huge
too, right?
spike. There was a huge spike in like December,
Yeah.
maybe
Right.
early January, and now it just seemed to like
Fall
quiet
off,
down.
right?
fall down, right?
Yeah.
And it's like there was this huge spike, and then my clients that are interested in purchasing right now, they're like, Danny, everything is a bidding war.
Yeah,
And then they don't go into these bidding wars, and then they're finding out that there was no offers.
there's
So it's like
they're
these
listing
these
houses at
agents
low
these
prices.
agents were like, oh, there was a lot of action. Let me set up this seller for a bidding war because a lot of action.
Yeah.
Let's go back to that what it used to be like, and then it's all of a sudden you'll hear some bidding wars going up seven offers or whatever the case is. So when you hear that there's 7 offers, the next person that's gonna put their house on sale is like, listen, they just got 7 offers. We're gonna try and get you 7 offers
Yeah.
too, and
Right.
and then all of a sudden it's like now I'm hearing that no offers are coming in
So
again.
there's a lot of mix right now. I don't think anybody has the strategy on selling, right? So purchase business is definitely not where it's at. I take a look and I watch MLS quite a bit, and inventory's there. I just
Ton of
think
inventory,
there's
yeah.
tons of inventory.
It's a
I-
buyer's market right now too,
It is, but a lot of these houses are sitting days on market because they're overpriced.
right?
A lot of what's happening, and what I think is, and I was going to ask you this question, like, where do you think agents should be heading in 2025? Like, what should they focus on? I myself love purchase business because it builds the book of business. You know, a lot of people want to know, like, where do you head in this market? And I think we don't know what strategy needs to be used to sell. So there's realtors that I deal with, and they're like, hey, we're going to put price here, offer date is this date, and we're going to try to drum up multiple offers. Then you've got others, agents, who are just taking listings and they're letting the homeowners dictate the price.
Right.
And now these houses are sitting on the market for so long, but they're overpriced because they're trying to catch 2022 pricing.
Yeah, I mean, honestly, from the real estate side, like I'm blessed to say like my neighborhood's quite nice and it's limited in housing. Like the way it's designed, there's just not that many houses there, right? I'm seeing more houses in
You're
my own
large.
little neighbor,
Large.
more houses in my neighborhood for sale than I've ever seen. And I used to have realtors come knocking on the door and being like, "Hey, I have a buyer, cash buyer for your house. Can you sell?" And I'm like, "No, like it's not for sale." But these houses, they've been on the market for quite a few days now. Like some even over a month.
Yeah.
There was a semi on my street priced like probably 150,000 under what it's worth. Again, to create that illusion of there being a buyer's market. And I think there's a big play on psychology.
I
Moving,
hate that, man.
I know, man, and we're all habits of
It's like
creature in the
it's like
creatures of habit,
not
rather.
fair. You waste so much people's time.
Yep.
Yeah,
Yeah, because
they
know?
take
you have
advantage of it.
not even that. Like you get us, you get called. It's like, hey, I want to put an offer on this property. What's the address? 123 Nowhere Street. And then you go look at the property. It's listed for 650, but should be selling for 800. Right.
Right.
So
Yeah.
now it's like, yeah, definitely. Like, well, you qualify for 700. Okay. And then you take the agent, the realtor then goes out to show you this property, but we know it's undervalued.
And if you
And you
call
should,
them, they'll say we're expecting 850 for this.
yeah, but it doesn't, it's not the market price. So it's tough right now. So if I had to ask you, for all the mortgage agents out there,
Yeah.
retention is hard right now. So the cross shopping on mortgages is a tough market because we're getting it a lot on renewals, and agents are like, hey, I got this client, they have a renewal coming up, but X bank is offering them X rate. What can we do to win? And then you have this purchase market where the inventory is sitting there because houses are overpriced. You have buyers on the sidelines who are ready to buy and sell, but that's not happening.
Yeah.
So my question is, if you were to give any advice to mortgage agents right now, what should they focus on? Where can they drum business from?
For sure. There's a few sources, right? But the first thing I want to, touch on is what you just said with retention being difficult. That's a good segue for Merrick's, right? Our trailer fee program helps you eat from both sides of the business as an agent. What I mean by that is when your client's up for renewal, the lender becomes your competition. In the trailer fee model, you get compensated for a renewal. So if you have a hard time taking advantage of the low hanging fruit, and I mean, I don't mean to sound, facetious or anything like that. At the end of the day, not everyone has time to farm their book of business. If you don't have time, you should be placing those clients into a trailer fee model where you're getting compensated either way. Moving off of that for a second, low hanging fruit. Using a CRM to organize your book of business is extremely important. You need to be organized. And if you're organized, you should be able to have the data access that you need. You should look at people right now that you've placed in mortgages in the past 2 to 3 years at higher rates, right? The 5% plus guys. Danny and I were just discussing a cashback strategy. You could use things like, so right now, cashback, the rate on an insurable cashback mortgage is lower than what it was 2 years ago for an insured mortgage. Right? So you could offer these people a switch transfer, give them cash back, use that to cover their penalty. Right?
Okay.
Low hanging fruit, is something that a lot of people kind of miss out on. Like, those clients, you should be in frequent contact with them. The guys that are over 5%, and then beyond that, I think touch points are really important as well. When I was a broker, I did a really good job of being in touch with clients that have funded a deal with already. It didn't matter. I'm not looking for a new business. I was just touching base with people once a month, 12 months out of the year. And that way, when their mortgage is up for renewal, they've heard from me 60 times already.
Okay.
Right? It's been 5 years. So if they don't come to me, then I really screwed up. Or maybe I really rubbed them the wrong way. But more often than not, they would. So I really think working your book of business is something that's overlooked often. Like a lot of agents will fall into the trap of, okay, I funded this deal. Who's the next client? Who's the next client? And don't get me wrong, growth mode is important when you're first starting out. But once you've grown, once you've funded, I'd say 25 to 30 million, look at how many clients you have now, right? How do I create value for them? And then this goes back to what I was saying about that social media campaign. Become a product expert. So maybe talk to the realtor about some of the niches that you know.
Yep.
Yeah, absolutely.
Hey, your client having a hard time getting financing for a cottage? I'm a cottage financing expert. Why don't we work together? Maybe there's something in it from you from a financial
So
standpoint.
find something
referral fees.
specific, an avatar of some sort, and pick that niche and just be specific to it.
Have some value. And then beyond that, there's so many different types of referral partners, right? So like people often overlook accountants. accountants are some of the best referral partners that you can ever have.
I think so.
Accountants, financial advisors.
And they have all the docs. They have the client's docs for you too, right? So if you get that lead, it's when you submit it to us as a lender or any lender for that matter, they're going to be very impressed. You have everything up front and it's audited financial statements or it's tax returns, right? Divorce lawyers is another one.
Yeah.
Well, let's go back to lenders because I think it's a good segue to get why Assad's here, who he is,
Yes.
and if we don't talk about Merrick's MPX and all that, they might banish
Oh,
us.
Lendwise.
Lendwise. So, who is MPX Merrick's? How can they contribute to the market? Why should we not be scarce? Well, I don't know what the right word is, but when people see a brand that they might not recognize, right? Like
Yeah.
if I'm presenting Merrick's or Lendwise to a client, what should help us bring the guards down? Who are they? What do they offer? What type of products do they give? And what should they look for?
For sure. Yeah. Well, I mean, Merrick's Financial, which is where I work, is celebrating its 20-year anniversary this year.
Holy shit.
20 years, man. 20 years in the business. We're a monoline lender, meaning that we are backed by investors as opposed to being a bank, which has their own capital, which is your money and my money, right?
Yep.
But monoline lenders have been in the mortgage space for a long time, and the purpose is to diversify. As a broker, again, creating value, you guys need to have options. If a client walks in here and all they can get access to is the banks, then really, like, what's the point, right? Can't they just walk into those banks? So you guys need to have those options on hand is number one. Regarding Merrick's Financial and who we were acquired by the Canada's biggest non-bank mortgage lender in all of Canada, right? Didn't I say Canada's biggest? Yeah, I said that twice. But point being, they're huge.
You haven't had any tequila today, have you?
I haven't, not yet. I'm just hungry. So MCAP is our owner. They are a massive company, and they've been in the business for forever. And we're backed by this giant and this pioneer in the industry. So we're even more secure as a lender now. Previously, we were an investor-driven business. So having said that, what we are is a monoline lender, and I think monolines differ from banks in a lot of cool ways, guys. We could talk about some of those too.
Yeah, because I think a lot of people, they want, like, obviously there's a big shift. Obviously, a lot of borrowers are traditionally used to the brick and mortar stores,
Yeah.
where we as brokers are introducing the monoline lender. So what's the difference? Like who?
Yeah, man, that's like honestly all it is like I was saying, the bank lends out money that they've received in the form of deposits, right? Whereas monoline lenders are backed by investors. And that's really the main difference. On the back end, securitization is a little bit different in terms of how the underlying asset is placed. But let's talk about benefits, right? The benefits of a monoline lender is we introduced what's called the insurable space to the market. At the bank, you have high ratio and conventional. With monolines, conventional gets split up into uninsured and insurable. And insurable is essentially a product where what we do is we take an insurable file, and I'll explain what that is, but we take an insurable file and we take another 500 like it, and we purchase a bulk insurance policy. We, as a lender, pay for that insurance, we reduce our risk, and we pass on the savings to the client in the form of a lower rate of interest. What I'm really hoping for as a BDM right now is that they pass on these new insurance changes that they've made with high ratio to 1.5 million. I'm really hoping they move this into the insurable space because that will really
I know
make the
there's a big gap
Yeah.
right now.
there's right now is an awkward we're in an awkward
Because I think that
stage.
product should be the insurable product, not the insured.
I wish, man.
Because that's where you're going to find that client is
Yeah.
in the insurable space.
Right now,
Yeah.
the only person that is purchasing at 1.5
Yeah.
insured, okay, you got to be making 300 plus,
Yeah, and it's a $75,000
or
premium.
Yeah.
or ready, you need a guarantor.
Yeah,
Yep.
So chances are you're not going to afford to make those payments.
No, that
so it
client
just it almost doesn't make sense to
I
have
want
to be put in that
That
product.
client's far and in between to find. I've yet to it's not an easy client to find.
and I mean you got to think if they have $300,000 of income, why would they do less than 20% down
Right.
and pay this premium, right? But what I do think there's a value in is those guys that are just over a million. So like the 1,050,000,
Yep.
the 1.1. I didn't have the 20% down, but the house I like is 1.1. Cool, it opens up the market to them. But 1.5 right at the cap, not so much. A colleague of mine, like, and a lot of calls I've gotten to, by the way, like people are like, "Hey, what's the rule changes? What's the rule changes?" My colleague said, she's like, "It's all smoke and mirrors," and that's just stuck with me, right? I feel like a lot of this was tied to politics more so than it was
Yeah.
improving the actual affordability for buyers.
Yeah.
Yeah,
That
you
makes
you
sense.
move that product to insurable, and I think we open up a lot more gates
Yeah.
and a lot more buyers, a lot more moving. You'll have people sell and buy because they have the ability to move equity and still be insurable.
And I won't get off your phone as soon as that happens.
Yes, like that will change everything.
Yeah.
All right, guys, that was pretty fire. That was probably one of my favorite episodes. I'm not even gonna lie.
Oh, cheers,
That was
man.
a lot of good things said. A lot. I think I
Thank
there's
you.
a keep an eye out, guys. There's gonna be a lot of puns taken from this episode. Danny's crossing his arms. I know he's cold.
I'm cold right now.
Just to bring it to speed on what we do on this episode, on our episodes, is at the end of every episode we host a bottle of tequila. Not only do we host a guest sometimes, and thank you for being a guest,
Cheers, man. Thank you for having me.
but we host a bottle of tequila, and we rate this bottle based on
Okay.
3 criterias. We rate it on the look, appearance of the bottle. We rate it on taste, and then we rate it on price. So
All right.
this is a bottle of Don Julio. It is a special edition bottle.
Looks nice.
Yeah, actually it is. It celebrates 70 years of
70 years of Don Julio.
yeah, So it's $109 at the LCBO. So what we do is we'll rate the bottle based on appearance, price, and so I'll start. So you guys, as soon as I walked into the LCBO, I saw this bottle, and I'm gonna tell you guys, it reminded me of Antonio Banderas. Okay. Why? Is because it has a little bandana wrapped around its neck. Okay. And if you look at the bottle, I never noticed the Don Julio logo, but he's got a little. There's like a figure in black there with the hat and sombrero, and then the bandana around it. It reminded me of like the Zorro. I don't know. Really cool bottle.
Legend of Zorro.
Yeah. Obviously, Don Julio is a great brand. It's been around for a long time. It's very, very popular. And the 70-year bottle. I mean, I thought, hey, let's give it a shot. I'm not too. Is it a Blanco? This one?
This is a white, and I say Blanco, but it's a clear anejo,
Okay.
is what it is.
So it's like a special edition.
Yeah.
Yeah. Well, let's give it a shot.
So who's going to be the first to go?
That's pretty smooth.
Wow, it tastes like chocolate.
You taste chocolate. I taste a lot of agave in this. Like you can.
Yeah, I'm getting a lot of sweet hints in this too, actually.
I had a chocolate. I don't know. Maybe it's just me.
You know, I heard
Yeah,
tequila is one of
afterwards.
the healthiest liquors as well.
It is.
That's why we drink it.
Yeah, that's why I've totally changed my drinking into.
All right. So give us your thoughts on the appearance of the bottle, the taste, and then the price of it being $109.
Rotation. I mean, if I'm being honest, I like the shape of the bottle. It's pretty cool. I like that it's a little cube. But as far as logo and whatnot goes, I like the font of Don Julio. Everything else, I'm not crazy impressed by. Love the little ribbon on there. That's a nice looking bottle. I'd give it a solid 8 out of 10.
Okay.
Right. As far as taste goes,
It's vanilla and honey is what you're tasting.
yeah, it's sweet for sure.
Does vanilla and honey together make chocolate?
There is no chocolate
No.
flavors, but I'm guessing
No,
like
that's sweet vanilla. I'd give this a solid 9 out of 10. This tastes really nice, I gotta say.
I actually like this. This is actually
Yeah.
sitting well.
Yeah. This.
Yeah.
Yeah.
I'm enjoying this a lot.
And what's the third thing I'm rating? The cost?
The cost is
Cost.
$109 for the bottle.
Ridiculous. Like in general, that's way too much for a bottle of alcohol. Like that should be. I mean, that's just Canada as a whole, though. We get ripped off for practically everything. I feel like, but this is way too expensive. This should be like $70 tops.
Out of 10?
Out of 10 overall, we'll give it a solid 8.
So you're 8.5 overall.
I'm gonna give it an 8 because of the cost.
He's gonna bring that down. All right.
Hold down.
Let's go Danny. Danny, give us your 2 cents in it.
So this at the LCBO. So this is the first bottle that at the LCBO is actually cheaper than Zin.ca. Zin.ca you're getting this at 113, where at the LCBO was 109.
Yeah.
This is a 70th year Don Julio anniversary. So for a white anejo, we actually had another one not too long ago. No,
It's right here.
we got to do a comparable. No, not that one. Behind it,
There's 3. There's 4
no, a
bottles.
white anejo. The one behind it, the
Oh, the doorbell.
the doorbell.
The doorbell, yeah.
This is its competition. We're gonna do a head to head on one of these episodes.
Yeah. That's okay.
Oh, there you go.
Yeah,
I mean,
because the doorbell's pretty good too.
it is good.
But this is, I'm really liking this.
I'm really liking it. Yeah.
It tastes nice.
Yeah.
I gotta say, it tastes nice. I just hate how much we have to pay for booze. It's just too much, I feel like.
Don't remind us, man. It costs us a lot every episode.
That's what I'm saying.
For the look, it's exactly where I guess tequila bottle for me is, man. That square look is exactly where it should be. I give it an 8, right? Flavor delicious. I'm at 8,
And price.
and price at $113. I mean, it's more of a gift for me.
So what are you at?
So I'm gonna give it a 7.5.
So you're 8 overall. John?
So obviously it caught my attention. Like I said, so the original Don Julio bottles, like all the other ones, they're actually shaped a little different than the cube. They're rounded on their bottles, right? So if you can look up, if you see on the bar. So it having a different shape and being the 7th anniversary with that bandana wrapped around its neck, giving it that Antonio Banderas kind of look. I like it. I do. I think I give it an 8.5. The taste is out of this world. Like I really enjoy it. I'm gonna give it a 9 on taste. It's really good.
It is good.
Yeah,
Those are nice.
and I'm not a Blanco kind of guy. But for it being a clear alcohol, not being mezcal, it tastes really good.
This is where it's going to go down now.
Yeah, no. So I know. I punish on price. I always do. But like Danny said, this is a bottle that you gift because it is a 70th anniversary. I'll give it a better rating than it should get because $109 for a bottle of tequila is like, you better give me a bottle this big, not a bottle this big.
What are you saying?
I'm gonna give it an 8. So overall 8.5.
Very good.
Yeah, great bottle. Highly recommend it, guys. If you haven't tried it, you can find it at the LCBO. It's $109. If you want to try it, come by here at 12 Par Boulevard. That's where we're located. Your Nesta Financial. You could find the episodes on all streaming platforms on the Couch Podcast 23. Assad, where can they find you?
You can find me at Merrick's Financial.
And you can find Danny at.
Mortgages by Danny C.
Guys, till next time, that's a wrap. We'll see you soon. Take care.
Thanks for having me.